Hello, Piotr speaking. Welcome to my weekly Forex analysis. Let's start with Euro USD. Okay, so monthly candle, I've plotted a resistance line based on the upper shadows. This is the blue one, and the market is also in this area. Some traders use it. And I think it may help a little bit on this monthly chart, especially we are around the 61.80 level, and this is a 61.80 level again regarding this move. I may plot another FIBO retracements based on that length. Let's see what we will have here. Okay, we've got 50% in this area. This is 50% of this whole move. Okay, so they're very typical levels for the market, and this is actually very accurately that top here. Okay, so I will have an eye on it, and we will see. Sorry, that's not that one. I should have used, okay, because this is the, okay, yeah. Wait a second. I should have already had one. Yes, I have already had this, because this orange, those orange levels, they are showing this retracement. So we are around this 50 level. Yeah, and the market with this top touched this level. So this is yeah, we are around this area. We're in this area. Okay, so this is an area where the market, a very typical level for the market, and especially 61.80 regarding this move, because I'm actually measuring this retracement, this move regarding this XA wave. But anyway, we had a strong previous candle, and the current one should actually move to the upside. There might be some issues around this area still. Because it's not a closed candle yet, but anyway, I think we should have the right arm of this. Yeah, I call it butterfly. There was a guy who said, okay, it's a Gartley pattern. Yeah, of course. I mean, every single pattern that looks like a W, it's for me a butterfly, and everyone that looks like an M, it's a bad pattern for me. I make it a bit easier for myself and for people who learn it. Of course, yeah, you are right. That's a Gartley pattern. But okay, anyway, this is the monthly chart, and this is not a closed candle yet. Yeah, so we cannot say anything about it. The point is that we are above Bollinger Middle Band, and we are above the moving average 100, and we are most probably heading to the Bollinger Upper Band. So. Weekly candle, a weekly green one with an upper shadow. It's a kind of candle. It's not a strong candle. It's a candle with an upper and lower shadow. So there is some indecision. This is because of the situation on the monthly chart. Very simple. Let's take the daily. That's the daily. On the daily, it looks like a sandwich in this area here. Look like a sandwich, but in my opinion, I think we had a 3 here based on this count. So this was a stronger third wave, and we are in the fourth corrective wave, A, maybe B, and a C to the downside. The market reacted to this 30 FIBO level, measuring the whole third wave. But this alone this is not enough. Shouldn't be not enough for the fourth corrective wave. So there should be an A, a B, and a C. So it should take a bit longer, because this was short. The second wave was quite quick. So this will take time. It should at least. So that's the situation on the 3 hours chart. And sorry. If I go to 1 hour chart, yeah, it looks like we may have something like A, B, and a C again to the upside. The only thing is that if that expansion, FIBO expansion. This is 261.80. So this looks like a third wave. 1, 2, 3. Okay, I mean 1, 2, and 3. 1, 2, 3, 4, 5. So this could be a third wave, third internal wave. But this is what I'm going to check during the week, how the market reacts, whether the market will be able to break this high or not, or will start falling down. If it falls down, it was an A, B, and C, so a C wave here. Because there are some very typical levels. Those green one, they are very typical for a C wave. Okay, like A, B, and a C again. So a structure for a corrective structure. Good. Anyway, I had a video prepared a video in this know-how part regarding when not to enter into the forex market. So have a look on that, and maybe this may help you a little bit. Good. Let's go to the Great Britain Pound USD monthly. We are around midway of the previous candle, so this is quite important. Weekly, this is a red candle on the weekly, so a strong red candle. 3 hours chart. Okay, a big B, maybe a big C. Resistance line, depending whether the market is able to break through this resistance, and a support line, whether this will be broken to the downside. Okay. So it was actually already broke. No, it wasn't. Sorry, it's only a point to plot the support line. So the support line is added, and now I'm waiting for the market. What will happen in this area here? Yeah, this is like 1, 2. This is a 3, 1, 2. We can even measure. I think we should measure already. Okay, I will use a new one. Maybe let's go with that first. This is the A, B, and maybe a C wave. So a longer structure for a corrective wave, A, B, and a C. Okay, and there are some. This is a FIBO 100 in this area, and this is 78.60 for this whole length. So retracement of this length of this wave. But let's consider this movement as a 1, 2, 3, 4. This could be an impulse, a first wave of a third wave. So this is also quite interesting, and let's check it out. Okay, this is FIBO 50. Okay, if there will be a strong reversal signal, a reversal pattern, I may send you a short position, a short signal. Okay, because of this FIBO 50. So if this is a 1, this is a 2, but of the third wave, of the third stronger wave. So we could have 1, 2, 1, 2, 3, 4, 5 for the third, fourth, and fifth. So this is the scenario. Let's check the 2 days chart just to make sure everyone understands it. This is an A, big A, a big B, and I'm expecting a big C to complete on this market. And most probably we'll meet with this moving average 100. Those are these typical levels for the C wave. And I guess I have already plotted. Wait a second, what is it? Okay, so that's the. Yeah, this is the ABC correction. The length of A placed at the extremum of the wave B. Again, this gives you a target for a C wave. This is a very typical here, very typical. Those are very typical levels for a C wave. The market is respecting 61.80. Yeah, but this is only 61.80. This is not a typical level for a C wave. It should be longer. Okay, it will take most probably 100, or even will touch those levels. This is more probable if it develops. Let's hope it will, and let's see whether we'll have a nice reversal as shown just in this area, so then this will be a nice trade to the downside, especially we've got a red candle on the weekly chart. Good. Let's have a look on the gold. And on the gold, there's only one point I would like to show you, 1 and 2. If it's right, there's a 161.80. Okay, and the market may make a reversal here. There was the first attempt. That this could be the next one. So sometimes the market takes 2 times, 3 times in order to reverse, and those were the first reversals signals weren't that strong, and this could be a next one a bit stronger. Especially the MACD indicator is not making a new high, so this is a divergence already. Okay, moving average convergence and divergence shows a trend change. Okay, predicts a trend change, and this is a support line. Sorry for this market, and we may have a break through this support line. Good. I think this is the most important stuff. Yeah, on the monthly we are close to moving average. To the Bollinger Middle Band. That's the monthly and the 3 days chart. Okay, a strong candle on the 3 days chart actually. This was strong. This was really strong. A break on this through this resistance line. This is a good example how the resistance lines are sometimes can give you a very strong trade setup. This is 1 to 2. It's amazing. Okay, good. Anyway, Japanese yens, Great Britain pound. A red candle, currently a red candle. We are in the midway of the previous candle, and again, one candle before. I mean, the January candle was a strong red candle. The February candle was not able to break through this candle, through the January candle. So this was a kind of weakness on this market, and now the current one may follow this pattern or this situation, which was we have here. Yeah, but this is only based on candles. Yeah, so you shouldn't. This is not a strong signal yet. This is a strong reversal. I mean, the green one and the red one. This is strong, but those candles. I mean, you can expect some reactions because only that we are in the midway of the previous candle, and this is where the market likes such levels. Yeah, so the 61.8 it is very typical for the market to react or to respect such areas. Let's go to the weekly. On the weekly, we've got a strong red candle. This is a very strong one. Support line, moving average. I mean, Bollinger Middle Band. So this is all the stuff which is needed to have a nice trade setup, to have a nice break through the support through the support line. This is already a signal on a RSI. Okay, a break on RSI. Actually, you should have a stop loss above that high. This is 600 pips, another 600, maybe 1,000, 1,200. So this is where it may go. But it's not that strong. I mean, this is a strong candle, but we should wait most probably for a trade setup. Yeah, because we are on this daily chart. We are close to the Bollinger Lower Band. I mean, we've touched the Bollinger Lower Band. This is a moving average 100, which is actually broken already. And this market could have started something new. I mean, this is the new means new impulse to the downside. I'm still considering it as a let's get this one. Okay, so A, B, and a C. Okay, FIBO 100 touched very precisely. I've shown you this 6-hour chart in one of my videos, ABC. Okay, the market is respecting this area as well, but this is also an A, B, and C as a shorter one, a smaller one, ABC. and this could be a part of a corrective move, of a first corrective move. Wait a second. Okay, this could be an A, a B, and then a C. Okay, an A, B, a C. So I'm expecting a fourth corrective wave will complete here, and this could be a first A, a first part of it, a second one, and a third one. So that's why an A, B, and C. But I'm not so sure the A is already in. Okay, this could look differently as well. It could be a stronger move like that to the downside, but so this is not confirmed yet. And but when this is not a third wave, 3, 4, 3, 4, 5. When this is not a first wave of a third wave of an impulse, of a bigger impulse to the downside, so this could be an A, B, and a C. Okay, so we could have 5, 3, 5. Okay, so it's as a zigzag. So this could be a big A. This is of course an alternative scenario. I'm talking about different scenarios. What it could be. Okay, this could be of course a part of as shown on this 6 hours chart, a part of an A, B, and a C, and a bigger structure in this upward move still. Because what I said last time when I had the short video, this strong bat pattern that gives usually 1-to-1 as a target after breaking through a resistance line. So this is 550, or this is only 450, and the market could have in this area FIBO 161.80, which is very, very typical for a fifth wave to complete. But on the other hand, it looks also quite nice because this is a high, this is a lower high, and another lower high, low, lower low, and this could be another lower low. Yeah, so the market may fall strongly to the downside. This could be a stronger move to the downside ahead of us. Okay, we've got a strong weekly candle, a red candle, so I'll be looking for a short trade setup for this market. Let's go to the Euro Japanese yen monthly. On the monthly chart, this was a strong reversal signal. I talked about it last week. I was expecting that the market will respect this strong reversal signal on candles. Okay, and this is what happened. On the 2 days chart, we had a reversal here. This was quite strong. And on the 3 hours chart, I have plotted the yellow FIBO levels connecting the first and the third wave. This was an A, B, and a C as a corrective structure, a fourth corrective structure probably. And this was another move to the upside, and the market respected the FIBO 100 as a length of this from 1 to 3. Okay, and reversed in this area. Okay, so that was what was happening on this market, on this currency pair, and now that's the question: will the market will follow the situation on the monthly? I mentioned a couple of weeks ago, whether we had an impulse here and we will have a stronger corrective move to the downside around FIBO 50 from the whole move. Okay, so a deeper correction, this will meet the Bollinger Middle Band. Yeah? So it may take a stronger move to the downside, but this is not that sure yet, especially because of this move to the upside. It looks like an impulse to the upside, so this could be a correction and then another move to the upside, unfortunately. Let's not that one. Okay, this is something else. So let's take FIBO retracements. And let's check where it may go. Okay, and this is yeah, this is FIBO 50 61.80, and this is now actually it's in the same area where it broke out of this area. Okay, so now the market is maybe retesting once again those levels here. It was a resistance, now it's a kind of support for the market. It was a strong resistance because the market was not able to break through this one time, two times, second time, and the third time, and then by the fourth time it went up, and now it may work as a support, and the market may find a support in this area and go to the upside. Okay, yeah, good. Yeah, this is pretty much the most important stuff. USD Japanese yen monthly situation. This is not a strong candle. Weekly, we've got a strong weekly candle, a red one. Support line broken. I talked about it last week. I was expecting kind of retesting here in this area. This looks like a red, green, red, and all of them have the same level. It looks like a sandwich. Okay, so sometimes it is good to not to think about the market too much. Just take the position, because what I've shown last week, I've shown you last week this 61.8 level, and I've shown the situation on the on this 3 hours chart, showing this measurement A, B, and a C, 127.20. Okay, this is a very typical level for a C wave to complete, and this was actually already a trade setup. Yeah, so you have to take the position. And I was hoping, I was thinking about a more accurate count, a more perfect situation. It was already a perfect situation. You shouldn't search for more. It's just a trade setup. Okay, 1, 2, 3, done. Yeah, it was very, very nice. Okay, so this is when you are waiting too long or trying to get even more and more precise counts. It do not happen sometimes. You keep on searching, keep on counting, but the market is moving. Yeah, so it's running away, unfortunately sometimes. And now I think this situation, that the market is respecting those levels, not able to break through those lows. There are those lows here. Let's go to the 12 hours chart, because it looks there is more to show on the 12 hour. Wait a second. Okay, we've got one low, second, third. Okay, I've connected those lows with a support line, and this is actually already broken. But the point is, this was a strong move to the downside. It's most probably the third wave in this move, a strong wave on this way. So the market will have a fourth, and then another move to the downside. Okay. Okay, so I think that was the most important stuff. Thank you for watching. Thank you for your time. Goodbye.